A new war is brewing between cryptocurrency holders and central banks. Let's see how that is going and what Jerome Powell, the chairman of the Federal Reserve in America, just said in the last week. This was just a couple of days ago. But before that, let's have a look at these articles that are coming out of the Financial Times. Now, this article talks about how the Bank of England, the Federal Reserve, the Bank of the EU, the ECB, and the Bank of China, the People's Republic of China, have recently announced their interests in CBDCs, and also how they are curbing cryptocurrency people or investors from making money that don't declare it to their tax authorities. Now let's go into the video that Jerome Powell just published a couple days back, and let's look at what he has to say about the recent developments in CBDCs, digital currencies, and in his opinion, how cryptocurrencies are doing.
Today we are in the midst of a technological revolution that is fundamentally changing our world, reshaping how...
So I'm going to take it straight to where he starts talking about digital currencies or cryptocurrencies.
Recently, the rise of distributed ledger technology, which offers a new approach to recording ownership of assets, has allowed for the creation of a range of new financial products and services, including cryptocurrencies. To date, cryptocurrencies have not served as a convenient way to make payments, given, among other factors, their swings in value. Nonetheless, coins tied to the value of the dollar or another currency, known as stablecoins, have emerged as a new way to make payments. These stablecoins aim to use new technologies in a way that has the potential to enhance payments efficiency, speed up settlement flows, and reduce end-user costs. But they may also carry potential risks to those users and to the broader financial system. For example, although the value of a stablecoin may be tied to the value of a dollar, these coins may not come with the same protections as traditional means of payment, such as physical currency or the deposits in your bank account. Therefore, as stablecoins' use increases, so must our attention to the appropriate regulatory and oversight framework. This includes paying attention to private sector payments innovators who are currently not within the traditional regulatory arrangements applied to banks, investment firms, and other financial intermediaries.
That's the whole point.
Technological advances also offer new possibilities to central banks, including the Fed. In particular, technology now enables the development and issuance of Central Bank Digital Currencies, or CBDCs. A CBDC is a new type of central bank liability issued in digital form. While various structures and technologies might be used, a CBDC could be designed for use by the general public. For the past several years, the Federal Reserve has been exploring the potential benefits and risks of CBDCs from a variety of angles, including through technological research and experimentation. Our key focus is on whether and how a CBDC could improve on an already safe, effective, dynamic, and efficient U.S. domestic payment system.
Is it efficient?
We think it is important that any potential CBDC would serve as a complement to, and not a replacement of, cash and current private sector digital forms of the dollar, such as deposits at commercial banks. The design of a CBDC would raise important monetary policy, financial stability, consumer protection, legal and privacy considerations, and will require careful thought and analysis, including input from the public and elected officials. To help stimulate broad conversation, the Federal Reserve Board will issue a discussion paper this summer outlining our current thinking on digital payments, with a particular focus on the benefits and risks associated with CBDC in the U.S. context. As part of this process, we will ask for public comment on issues related to payments, financial inclusion, data privacy, and information security. We are committed at the Federal Reserve to hearing a wide range of voices on this important issue before making any decision on whether and how to move forward with the U.S. CBDC, taking account of the broader risks and opportunities it could offer.
That's smart.
The paper represents the beginning of what will be a thoughtful and deliberative process. Irrespective of the conclusion we ultimately reach, we expect to play a leading role in developing international standards for CBDCs, engaging actively with central banks in other jurisdictions, as well as regulators and supervisors here in the United States throughout that process.
Right, so I'm going to cut it there. It does sound like he hasn't really made his mind up about what a CBDC issued by the Federal Reserve is going to look like, but he's open to listening to people, professionals who have worked in this space for the last 5 to 10 years around what they think the privacy concerns and concerns for the Federal Reserve, one of the largest banks in the world, would be. So that, I would say, is a big positive. It does sound like he appreciates the value that cryptocurrencies have brought into the market, but it doesn't necessarily sound like he is looking at cryptocurrency technology as being the basis of this CBDC. So let's wait and find out what he really means when he talks about his central bank digital currency. Only time can tell. In the end, he mentions that a paper is going to be published this summer, this year, and we're going to find out more about what he means by CBDCs. So there are some other articles about what CBDCs are, and every article seems to have its own little opinion about how it differs from regular electronic cash. But if you look at the blockchain oriented or the blockchain biased papers, they talk about how there are three types of currencies. There are CBDCs, digital currencies, and blockchains. Now, other articles like this one from fool.com talks about how there are three types of digital currencies. You've got Bitcoin and altcoins, which we all know about. Stable coins, which are a generally new class of asset. A lot of cryptocurrency traders might recognize it as basically just a tool for an on-ramp, a tool to go and buy cryptocurrencies, but they can actually be much more than that because they are cryptocurrencies themselves. They are hosted by a blockchain like Ethereum, and they actually operate like a fiat currency like the US dollar or the Great British Pound. So they're a sort of in-betweener between the two. And then you've got the CBDCs, which really have yet to be invented, have yet to be used. Now I want to take you to this page issued by the Bank of England about their opinion on what CBDCs are. Keep in mind, the Bank of England was one of the first central banks that started researching cryptocurrencies for its own use. So it was sort of the pioneer for some time before other central banks also started popping in and doing the same thing. And the way they define CBDCs is it's basically something in between banknotes, which are issued directly by central banks. Central banks are responsible for issuing currency, physical currency. They're in between that and digital money, the type of money that we're accustomed to sending our friends these days. Even PayPal, Revolut, whatever platform you use to send money to friends and family, or whatever platform you use to get paid in, that platform uses digital money. Basically, it's a digital ledger of the money that you hold using background technologies like Swift, which we don't realize day to day, like the internet. And CBDCs are something in between that. So what they're trying to say is that they're issued directly by the central bank, but they can be used as digital money. They don't go into the technical details of how the central banks are going to control not just the issuance of CBDCs, but also the use of them. So potentially you may not be able to use a CBDC for illicit activities, that's an obvious one, but also things that, let's say, a certain government doesn't want you to buy. Because you're looking at a centralized entity controlling an issued currency, which, whether it uses blockchain or not, has the ability to give permission to what you buy and sell or transfer your money to. So that was just a brief introduction about CBDCs and what Jerome Powell had to say. Now, when will you be able to buy CBDCs? I don't know. Nobody knows. It depends on the first comer in the market, whoever will be the first issuer of CBDCs. Most likely, it's not going to be any different in value from its native fiat currency. I think that is the whole point of CBDCs. So should you care about when CBDCs are issued? Probably not. And I'm going to leave it there. If there's anything else that you want to know about CBDCs or anything else on this topic of cryptocurrencies and digital assets, let me know in the comment section below. And I hope you found this video useful. I'll see you next time. Bye.